Today, new inflation data sends Bitcoin and Ether plunging. Ethereum's proof of work hard fork gets a deadline. And speaking of ETH, we talked to Ben Edgington of ConsenSys about what developers are watching ahead of the merge. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital asset prices falling sharply this morning. By noon Eastern, Bitcoin slid below $21,000, Ether fell below $1,600, and Solana tumbled to $34. Now, cryptocurrency prices are moving in lockstep with Wall Street, which also sold off sharply through the morning thanks to a hotter than expected inflation report. The consumer price index rose by 0.1% in August. Analysts were actually expecting prices to fall, but instead, costs just keep rising. This all means that the Fed is likely to keep raising interest rates until inflation is under control, which is bad news for both stocks and crypto. Okay, let's talk about the top stories. First, Fidelity might offer Bitcoin trading to some of its clients. According to a report from the Wall Street Journal, the investment firm is looking into a plan to let individual investors buy and sell Bitcoin on its brokerage platform. Galaxy Digital's Mike Novogratz referenced the rumor at the SALT conference in New York, saying that a bird told me that Fidelity is going to shift their retail customers into crypto soon enough. Now, Fidelity has long been involved in the crypto space, from launching Bitcoin mining back in 2014 and Bitcoin trading for institutional investors in 2018 to Bitcoin 401ks just this year. And speaking of Novogratz, his firm is facing a new lawsuit. BitGo announced that it was seeking more than $100 million after Galaxy abruptly ended a merger agreement with the crypto exchange. Galaxy offered to buy BitGo for $1.2 billion back in May of 2021, and now the company says that Galaxy intentionally breached that deal. Galaxy, meanwhile, said that BitGo violated the contract when it failed to provide financial information by July 31st. Last, we now have a deadline for Ethereum's proof of work fork. In a tweet, Ethereum POW said the mainnet will happen within 24 hours after the merge. The account also said to expect all code to be public by the deadline. Some miners and developers have criticized Ethereum's move to proof of stake and could stay on the fork when the merge is complete. All right, on to our main story. Let's keep talking about the merge. I spoke to Ben Edgington, lead product owner at ConsenSys, about what developers are expecting this week and what issues are most likely. Okay, so as we approach the merge, how are you and developers broadly preparing, and what are you watching as we get closer to that final deadline?
Yeah, this is really very much the waiting stage now. We've been working on this thing for a long time. Specifically, as the merge is currently architected for about 18 months or so, and pretty much all the heavy lifting was done months and months ago. And since then, we've been testing, really everything that we possibly can. Now, as devs, we are just waiting. Meanwhile, the other participants in the ecosystem, the people running nodes, the people running infrastructure, they need to be upgrading and becoming merge ready. So kind of our work is done, and it's kind of over to the community now. And yeah, I think we are pretty much there. So it's just waiting the final countdown. So we're monitoring this total difficulty of the mining chain, and when it hits a certain value, we cut over. Currently looking at about 55 hours from when we're speaking. New York time would be about midnight Wednesday. It might drift an hour or two either way, but it's getting kind of, as it gets closer, our predictions are getting more and more accurate. So yeah, that's what we're looking at.
Now, we've seen some platforms say that they will shut down Ether trading as we wait for the merge to complete. Is that tied to any specific risks? And what sorts of risks are you watching out for or seem most likely at this point?
So it's quite normal for exchanges to suspend deposits and withdrawals around any kind of network upgrade. So that's business as usual, and I expect that. One of the things that we've designed these networks for, kind of the point of the network, is to be resilient in the case of failures. So we're building reliable network on unreliable infrastructure. So even if quite a lot of the network doesn't make it through the merge, if they haven't configured their clients right, or if there's a bug or something like that, even if 10, 20% of the stakers are not prepared, then the network will continue. I mean, Ethereum will keep on chugging. So I'm not too worried that we'll have anything catastrophic happen during the merge. In the worst case, we will suffer some degraded performance for a few hours while people update their configurations, reboot their nodes or whatever. And in the best case, nobody even notices it's happened. Everything continues as before, seamlessly and without interruption.
So how soon after the merge takes effect will you have a sense as to whether or not it's been successful?
I think we'll get an indication within the first few minutes. So the first thing we'll be looking for is we've cut over from proof of work to proof of stake. Is the network producing blocks and blocks with transactions in them? So is it business as usual for Ethereum? Now, under the proof of stake network, we expect to see a block every 12 seconds like clockwork. It's not going to be random anymore. So if we are missing blocks, that indicates that the designated block proposer for that slot is offline. So yeah, they might be on the wrong fork, or they might have the client might have crashed, or they might just not be merge ready, one way or another. So we'll be looking for missing blocks, and we'll probably see a few because there's always a few people who haven't quite configured everything correctly. But as long as we're getting blocks more or less every 12 seconds, we're skipping, every third, fifth, 10th block, we'll be fine. The next thing we look for is participation rate. So under proof of stake, we have this new thing where validators vote on every block, and we have about 420,000 validators. So we're looking to see every 6 minutes, 420,000 votes. And if some of those validators are offline, we'll see a lower participation. So it normally runs at 99.5%, approximately on the beacon chain, the proof of stake chain we've been running for like 20 months now. If we see it drop below, say 70%, that's starting to be a cause for concern, but that would be a big chunk of the network, 30% of the network going offline. The final thing we're looking for is finalization. And again, this is new with proof of stake. What it means is that the network agrees that there's a certain block that it will never revert. It will never change history before that block. Proof of work doesn't really have this property. Normally, we finalize blocks after about 13 minutes. So we're looking to, within 13, 15 minutes or so, to have finalized the merge block so that is then set in stone, and we can, that's when we pop the champagne. That's when I'll be going.
What is the worst case scenario here? Like, are there different DEFCON levels if things don't go according to plan?
Yeah, I think the worst case is the chain halts, that we're not producing any Ethereum blocks, and basically Ethereum stops. We've never seen anything like that in any test scenario, and it's kind of hard to imagine how it might happen. But that's the worst case that could happen. Now, at that point, we've basically shifted Ethereum off proof of work. There's no going back. So we can intervene by explicitly telling the chain where to restart from. So we have this facility, we can override the network, and so we'd have to tell all of the users, all of the stakers, what parameter to set on their client, restart, and then we pick up where we left off. But that would be a multi-hour stop of the network. I can't imagine that happening at all, but we have a fallback even in the worst case.
So the merge doesn't solve everything for Ethereum. What comes next? What are you most excited about?
This feels like an ending, and it feels like a beginning. I mean, it's a sort of an ending in the sense we've been working on moving to proof of stake for many years now, and I'm glad to have participated in that. And this is a massive deliverable for the Ethereum roadmap. But in another sense, it's only a beginning. I mean, we have this large slew of things that we want to deliver over the next few years. Scalability is next up for the devs. So increasing the capacity of the base chain so that we can enable rollups and all the L2s on the system that adds scalability to Ethereum, that we can supercharge those and they can improve throughput by 100x or 1000x, and really deliver global scale for very low cost. So that's the next thing up, and beyond that, we've got all sorts of sustainability things around reducing the state size and improving the consensus mechanisms and so on. But scalability is next up on the moving to the top of the list.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.